Hello, everyone, and welcome. I'm Ishara Anandram, a principal consultant at IBIS Consulting. I'll be sharing some of the practical lessons that we've learned while undertaking impact due diligences for our impact investing clients. A special thank you to AVCA for hosting us and to you for joining. Let's dive in. The agenda covers a variety of topics today based on our experience of working in the impact space over a number of years, and more specifically, undertaking a number of impact due diligences across a variety of contexts. Before we begin, a very quick introduction to IBIS Consulting. IBIS is an emerging markets ESG and impact advisory firm. We provide clients with access to a wide range of service offerings across the investment lifecycle. Today, I'm joined by one of IBIS's long-standing impact clients, SPE Capital, a private equity firm that invests in Africa across a variety of sectors. Noura Bakur, who is the head of ESG and impact at SPE Capital, will share her insights from a fund manager's perspective on the practical lessons learned about impact due diligences. Thanks for joining us, Noura. To begin, I first wanted to touch on what an impact due diligence is. Essentially, it focuses on interrogating the potential positive and negative social and/or environmental impact prior to an investment. This ensures that impact considerations are factored into the deal-making process from the get-go. Although an impact due diligence is undertaken at a specific point in time during the pre-investment process, it should ideally be informed by earlier stages in the process. In other words, the screening phase. In addition, the outputs of the due diligence should also inform subsequent stages of the investment process. For example, at the screening stage, an investor or fund manager might have already identified key areas for the due diligence to interrogate, although this isn't always necessary. The DD itself should explore both the positive and negative social and environmental impacts. Moving to the contracting stage, the relevant findings of the impact due diligence should ideally be embedded as contractual requirements. This might include asking the investee to adapt their operations to take impact considerations into account explicitly, including gathering and reporting on necessary impact-related data to evidence impact contribution. During monitoring and reporting, the goal is to measure and report on progress towards the intended impact, as outlined in the due diligence. And finally, at exit, the aim is to demonstrate the impact achieved through the investment, which is ideally aligned to the impact due diligence focus as far as possible. It is also good to identify opportunities to further enhance impact for future investors. There are many drivers which prompt different stakeholders to adopt a rigorous impact due diligence process. For the investor or asset owner, key reasons include, firstly, validating the investee's perceived impact contribution, thereby minimizing the risk of impact washing. This facilitates greater visibility and accountability, and also ensures that funding is allocated to the most impactful investments, as it aligns to the investor's mandate. Additionally, impact due diligence enables investors to aggregate and demonstrate impact at a portfolio level, provided that the requirements are clearly established from the beginning. This allows for impact-related data to be gathered and presented in a streamlined way across different investments. For the fund manager, an impact due diligence helps ascertain the investee's potential fit with the fund's mandate and assess alignment with underlying investor expectations. Ideally, it should also identify barriers to achieving impact and provide guidance on how these can be addressed if it is within the control of the investee, fund manager, and/or investor, or managed if it is outside their control. Impact due diligences also enable a fund manager to effectively manage all stakeholder expectations upfront regarding impact contribution, management, measurement, and reporting post-investment. For the investee, an impact due diligence should ideally improve their understanding of specific fund manager or investor requirements before investment, offering an opportunity to determine the extent to which they can feasibly meet these requirements before they are integrated into the contracting phase. Investees should also be better positioned to leverage the support of the fund manager or investor to meet specific contractual requirements, which may require a significant financial and/or non-financial investment. And finally, an impact due diligence enhances the marketability of the investee, both during the investment period and at exit, since it guides the investee to measure, manage, and report on their impact contribution over the course of the investment period. Now let's move on to some of the trends and challenges we've encountered as service providers in the impact due diligence space. Firstly, we reflect on trends that we have observed at various stages in the DD process. In terms of framing an impact due diligence, the key distinction is the extent to which an investor has an established impact framework in place to guide the focus of the assessment. In the case of investors who do not have such a framework in place, most of them seek to assess any potential impact that the investee may contribute to using broad frameworks such as the United Nations Sustainable Development Goals. It is also important to highlight that similar impact objectives can be assessed very differently depending on how an investor has defined the objective. For example, some investors choose to only focus on resource efficiencies when seeking to achieve climate change-related impact, while others expand their focus to also intentionally invest in companies that are focused on increasing access to clean energy. During implementation, the extent to which impact influences the investment decision determines the depth of an impact due diligence. Impact due diligences can assess, firstly, sector-agnostic or cross-cutting themes such as gender and job quality, sector-specific themes such as financial inclusion in the case of an investment in a financial institution, investee-specific themes such as digitalization in the case of an investee that intentionally draws on the latest technology to facilitate its operations. There is also a growing focus on developing impact indicators and gathering the associated baseline data as part of the impact DD in order to help with post-investment measurement and reporting, as previously discussed. Investors are also focused on contextualizing the investee's contribution to impact by drawing on existing benchmarks and understanding the investee's unique market position. The outputs of an impact due diligence are often customized and presented in a specific format or template, such as an impact tool, depending on the investor's requirements. Some investors also prefer to combine the impact due diligence and ENS due diligence into one report, while others prefer separate reports. And lastly, some investors place significant emphasis on the impact action plan, particularly in cases where the investee is expected to meet specific requirements as mandated by the investor. Moving on to our case study, Noura from SPE Capital will share her reflections as a fund manager overseeing the commissioning of impact due diligences. She will draw on a recent transaction where SPE was considering investing in a private education provider in North Africa. For this due diligence, SPE focused on two key areas: access and inclusion, and job quality. IBIS evaluated the investee's potential impact using the Impact Frontier's 5 dimensions of impact framework, leading to the development of an impact action plan to guide SPE's investment decision. Noura, can you tell us about SPE's objective for undertaking an impact due diligence?
Yes, sure. Hi, Ishara, and Thank you all, and thank you AVCA for hosting and IBIS for this opportunity to provide insights on the impact due diligence process. Before we jump into the Q&A, if that's okay, Ishara, I just want to say a few words about SB Capital, perhaps to better understand who we are and how we invest and how that shapes our approach to impact. So SB Capital is an independent investment management firm formed in 2016. We focus on investing in growth stage companies across Africa, with a particular focus on North Africa. And we invest across a variety of sectors, including education, healthcare, manufacturing, and business services. And this with the goal of contributing to sustainable development in the region. So really balancing the needs for economic growth with social and environmental well-being. So our approach to impact is very much holistic, by the nature of how we invest and where we invest. This impact is very much multi-dimensional. It's consistent with leading international impact frameworks and methodologies, including the impact principles and the SDGs and the IMP's 5 dimensions of impact, all of which you've touched upon, Ishara. But it is also very much tailored to our investment strategy and our context. So I think that's important to keep in mind to provide some, our perspective from a fund manager point of view. So Ishara, you asked what is SP Capital's objective for undertaking an impact due diligence? And my answer to that is twofold. The first, our goal is to be able to systematically assess early on, so during the pre-investment stage, the opportunities for positive impact, and this in line with our proprietary impact framework, which we developed in 2021, that measures impact across 5 dimensions, and this really in an effort to make our impact intentional, explicit, and measurable. And then secondly, based on the results of the impact DD, the goal is then to be able to put in place an impact action plan, which you also mentioned, Ishara, in your presentation. And this is very important because particularly in establishing it early on, pre-investment, because it's important to discuss it with the target prior to investing, that ensure that the management is really on board and aligned and fully committed to achieving the intended impact. So once we've done all that, once the action plan is incorporated into the contractual agreements, we really pave the way towards a successful impact implementation phase, where we're all working together with our partners in achieving the impact initiatives that we set out, allowing us to track and measure the progress made, and then to report to our LPs and in our publicly available annual impact report as well.
Perfect. Great. Thanks so much for that, Noura. And in SP's view, what would you say a successful impact due diligence looks like?
What makes for a successful impact DD really starts with a clear identification of the scope of work. Meaning, before we start the impact DD, we really need to make sure that we've properly identified the areas with the strongest potential for impact that we really want to focus on. And the way we do that at SP Capital is that we first start by conducting an initial impact assessment using our in-house impact measurement tool that relies on a simple and replicable methodology that allows us to be able to score multidimensional impacts in a very systematic way. So in doing this internally with our investment team, we are able to identify. So in this case, when we're looking at the education provider opportunity, which you mentioned, we are able to identify during this initial assessment phase that our impact will primarily focus on increased teachers training. So that was the job quality piece that you mentioned, and also reaching more students, so really increasing access to quality education. So that's the access and inclusion piece that you mentioned. So having identified early on, though, that where we're focusing our impact, That's where then IBIS comes in to really conduct a deeper dive into these specific areas, impact areas, conduct an in-depth analysis of the target's current impact performance, but also the potential future impact performance. And this is extremely important to us because it allows us to then confidently set the baseline impact score for the company and to set the target impact score, which then allows us to measure the impact during the life of the investment. But really, just to end, I mean, for the impact DD to be fully successful, it's really crucial that the final report also provide very clear recommendations that are actionable, that are realistic, that we can easily incorporate into the impact action plan and agree upon that then be agreed upon by the target company prior to investing.
Perfect. That sounds great. What did SPE find particularly useful about how this specific impact due diligence was undertaken?
Well, I mean, we really appreciate how IBIS has been able to tailor the impact DD methodology to integrate seamlessly with our impact framework. I mean, this customization has really ensured that the analysis was not only thorough, but also highly relevant to our specific needs, enabling us to make well-informed investment decisions. Also, we found that IBIS has a unique value add in terms of practical understanding of the local context, deep technical knowledge, and ability to synthesize information. In addition, we've been very impressed by the level of flexibility from IBIS in working with various target companies across different countries and sectors and timelines and languages, combined with a very kind of patient approach, particularly when it comes to data collection, which has really smoothed over many complicated situations we found. So all this is what has contributed to the long-lasting relationship between IBIS and SB Capital on the DD impact, on the impact DD process. Yeah,
it's amazing. That's great to hear. Thanks, Noura. And then finally, what key lessons were learned about the impact due diligence process that was subsequently drawn upon in future impact due diligences?
The key lessons we've learned are first to always precede the impact due diligence with internal discussions and impact assessments, which can then be effectively supported during the impact DD. And then secondly, to really focus the scope of the DD on selecting the most relevant metrics and suggesting recommendations that are feasible. Again, having an actionable recommendations is really key, and that really maximizes the impact of the target company.
Perfect. Great. Thank you so much, Noura. That was great, and it was very useful hearing your perspective. I'm sure there's people in the audience that would value that as well.
Well, thank you, Ishara, again for the opportunity. Happy to be here.
Looking ahead to the future, some of the developments that we expect to see in the impact DD space in future includes, firstly, we expect to see impact DDs becoming an even bigger priority for investors and fund managers. Our view is that impact due diligences will no longer be seen as an add-on to the ENS due diligence as some investors currently view it. In relation to this, we expect impact due diligences to also require more dedicated funding to support its effective implementation, being recognized as a standalone DD stream. There is also an increasing focus on the standardization of approaches, for example, drawing on the 5 dimensions of impact and the IRIS Plus database. However, we feel that there will always be a need for some level of customization to align to investor and a fund manager specific requirements. And as Noura mentioned, SPE Capital has customized these frameworks to suit the fund's mandate as well. Impact due diligences will also likely have a bigger influence on investment decision-making in future. And the focus will need to be on demonstrating social and/or environmental value alongside financial value. So really kind of getting to the definition or the crux of impact investing. And lastly, the increased need for robust impact data at various levels will likely lead to a greater emphasis on establishing formal impact measurement and management systems post-investment. Noura, do you have anything to add to this based on your experience in the space?
I mean, that pretty much covers it, Ishara. What I would say is that what we're seeing is that we do see, we very much expect an increased reliance on technology and data analysis tools to be able to manage large portfolios and make sure the information that is collected is accurate and comprehensive, and that we're really providing the standardized metrics to the extent possible. So I think that's something that we'll be seeing more of, more expectations in terms of transparency and standardization from a measurement perspective, for sure.
Perfect, great, thank you. So that brings us to the end of our discussion today. We hope you found the session valuable and look forward to continuing the conversation with you. If you would like to chat further about anything discussed today or anything about impact DDs more broadly, please feel free to contact me. Thank you.